Hey, welcome to the show. It's Tuesday, June 9th, 2020. It's Des Moines Real Estate Market Update. This is week 23, and today the topic is going to be, is real estate back to normal? I've had a lot of people ask me this past couple of weeks, hey, are we back to normal yet? Are we seeing some normal things back in the real estate market? And the answer is yes and no. We are seeing, what it probably feels like normal for a lot of agents and a lot of buyers and sellers out there, but we're really not quite back to what I would consider to be a normal market. So this week I'm going to focus on a couple of different statistics here that'll kind of show maybe whether or not we're back to normal or not. So if you have questions today, I've got John Niemeyer joined me here. Hi, John. Glad to see you. And Joyce Gibson is with me too. Joyce, I think you're from Ames, I think, or at least Ankeny up north here with Hunziker. So is that who you're with, Joyce?
Yeah, I worked in the Ames market for a number of years. I've been in the business 40 years.
Can't hear you there. But
okay.
Anyway, glad to have you guys join me today. And if you have any questions, just pop them either in the chat if I can't hear you, or just unmute yourself at some point, and we'll try to answer those today. So, well, let's jump in here. It's week 23, and so again, the topic is it normal? Are we back to normal or not? And one thing I'd like to kind of start off with is our year-to-date months of inventory. And you can see back here, a lot of my graphics have got this March date pinned off over here, and this is when we kind of really started to see that COVID-19 really hit us. And so what you can tell is by about mid-April there, everything kind of slowed down and inventory started to build. And you can see what happened to months of inventory. It really started to rise, but only for about maybe two weeks or so, and then it started back on a downward trail. And we're currently at 1.7 months inventory, where this is the green line for 2020, and in 2019 we were at 2.7 months of inventory, which you can see we were back on the upswing. And the real estate market in Des Moines is kind of cyclical. We kind of go down, at least in months of inventory, we go downward until we hit about that first part of June, and then we head back up May to June. Well, obviously with COVID-19, we are just delayed this year, and you'll kind of notice that we're kind of back on that downward trajectory. We just almost had like a pause, and I think what we're going to see is this market kind of come right back up again. But the question of the day is this normal? Well, no, it's not normal. But I guess I hesitate to say not normal is what I want to say is not normal is not a negative term in a lot of respects. Not normal just means that it's not like it was last year, and it's not necessarily a bad thing. It's just, no, we're not back to normal yet, what we consider normal. So what I do, like I say, what I expect to see happen here as we move forward into July is this number kind of dip maybe just a little bit more, and then we'll kind of start to rebuild back up as we move up into the late summer and into the fall marketplace. So assuming nothing else happens this year, I think we're going to kind of maybe get back to normal here. But that's our months of inventory. So months of inventory, for those of you who are watching that are curious, what does that mean? It means in our case at 1.7 means that in 1.7 months, so just under 2 months, if no new homes came on the market, we would be out of inventory to sell. That's, it would eat up all the homes that are currently on the market, and we would be without homes to sell. It would take 1.7 months to do that. And a year ago, we were just under 3 months of inventory. Now, obviously, inventory comes on all the time, so we're always building, so we're not going to run out of homes for sale, but that's just a good indicator there. And the benchmark in our marketplace is between 4 and 6 months being a balanced market. And anything under 4 months of inventory in our marketplace, some markets it's 5 months to 7 months, but in our marketplace, it's always been kind of 4 months to 6 months. If it's under 4 to 6 months of inventory, then we're in a seller's market where we have more buyers than we have for sellers. And so as we kind of move into the summer months, I think we're going to just stay in a seller's market probably most of this year. And we kind of, you'll see that 2019 kind of did that as well until we got near the end of the year there. So let's take a peek at the number of homes for sale. I've heard some reports say that home inventory is starting to rise, and I'm not seeing that. I don't know where they're seeing that. what we're seeing here is, again, back to March when everything kind of hit, inventory did start to rise a little bit. In fact, it flattened out as home sellers kind of said, okay, what's going to happen, and home buyers didn't put their homes on the market. So we saw that for a period of about 3 or 4 weeks there, we had kind of a flat inventory. We sell a few, buy a few, but we didn't really start to see our inventory start to rise until we got into into the early month of April, at which point then inventory started to go downward. And it didn't go downward because we had people take their homes off the market. It went downward, excuse me, it went downward because home buyers were out there actually buying homes. And that's kind of the market we're in right now. We have very, very active buyers out there that are buying homes that are coming on the market faster than we can replenish them. So when that happens, it's like a faucet. You've turned the faucet on, open more, and the water's running out, so the listings are running out. What we need is more sellers to come back on the market. And we say that all the time, but this is exactly why we need that. And I'll show you near the end here a graphic that kind of shows you that we really aren't seeing a lot of extra homes come on the market, but the ones that are selling very, very quickly. So is this normal? No, not for what we're used to. But again, taking that into vain, that idea that not normal is not a negative number or a negative saying here. It's just what it is. So we're not what we were yet last year. What I do kind of expect to see happen again, just like the months of inventory, when months of inventory starts to rise, we'll also start to see the number of homes that are available for sale also start to build. And so just like last year, we hit that around April. This year, we're probably going to hit that around July before we start to see that number rise again. Pending sales is kind of the opposite side of the graphic. This one, we want to see the higher numbers. We want to see this graphic go higher. And what's been most impressive through all of this is that you'll notice the orange line, or it's kind of an orange line there, has never dipped into 2019. This is 2020. We did have a slowdown as COVID-19 hit, but we were and still are on track to have a very, very strong year with buyers. And a lot of this is being fed by low mortgage interest rates, which you'll see in another graphic here in a minute, where the median sale prices are showing up. But we're above 3,200 homes in the sale pending status right now. That means that there are over 3,200 homes with buyers waiting to close on their purchase. And we never got above just over 2,700 last year at the height of that. And again, our typical market will kind of slow down as we go down throughout the year there. So I think we're still not quite done seeing sale pendings rise. We're going to see sale pendings rise all the way up into probably July before they start to tail off. But this is really, like I say, a good sign. So back to the question: is it normal? Not normal, but boy, it sure feels good if you're a seller out there and you've got your home on the market, because your homes are still selling very, very fast because of this. This year was the first year I started tracking the shortage, whether we had an overage of homes or a shortage of homes. And to do it right, what I did was I broke it down by our 4 subcategories. Our single family resale, which is this blue line, and that's where the bulk of our sales come in. Okay, this is your single family homes that are not brand new. They're out there. They've been sold before. The condo townhome resales is the next line. This is this line right here. The single family new construction and condo is up here at the top, and you'll notice that the single family new construction kind of hovers along this 0 line. And what this 0 line represents is that's the balance. That's just enough homes that we don't have to add any more to bring the months of inventory into a balanced market or out of a seller's market, for example. And so new construction, that tells me that new construction has had just the right amount of inventory pretty much all year long. We're starting to see a little dip right now, but that's to be expected as we go into the summer months, and a lot of home buyers are selling their homes that are moving up into new construction. So new construction will tail behind a little bit from the resale, because these, the first-time home buyers and the first-time sellers, and maybe the second-time sellers are moving up and buying into new construction. And what's really feeding that, I think, this year is, again, that low mortgage interest rates. So, but look at this number here. This is the single-family resale. So again, it's not new construction, it's just single-family homes. About the middle of March here, when we had the COVID-19 hit, we needed about 2,000 more homes to enter the market before we would be considered a balanced market. As the market kind of slowed down going into April, and this actually, actually continued into April here, halfway into May, we saw a little bit of a rebound. But boy, then as soon as the buyers really all started coming back out and we started to see some more buyer activity, we actually dipped below 30, right at 3,700 homes short last week, and we're currently, as of last Sunday, 3,546 homes short of the number of homes needed to bring us back into a balanced market. So we need almost 3 times as much of our inventory that we currently have in that category. The question on this one, is this really normal? It really is kind of close to normal, because we just see this. We have seen this kind of over the last few years. We just see that single family resale numbers just continue to drop, because home sellers just aren't quite fast enough bringing new inventory on, and that's what drives us into that deep sellers market that we're in at this point in time right now. So the year-to-date back on the market now. Back on the market, what that represents is when a home goes under contract and maybe the buyer's purchase falls apart. Maybe the buyer got cold feet. Maybe they, in some cases, maybe they didn't qualify for the loan. They had a pre-approval, but then something came up and they didn't qualify for the mortgage. Sometimes the seller will have cold feet. And you can see the purple line is 2020. And we definitely had, right as COVID-19 hit, we saw quite a surge. We almost hit 40% of our sales near the end of, at the first part of April, were coming back off the market. And that's totally understandable. That's nothing to be, oh my God, what happened? This is just really totally understandable with what happened with COVID-19. We had home buyers that were in the process of making offers and maybe going through home inspections. And then all of a sudden there was all this talk about, oh, we need to quarantine, we need to social distance. And we did see just quite a surge of this back on the market. So homes came back on the market, but only temporarily, because you can see that as of May, we were trending downwards. And then through the middle of May and now currently into June, we've pretty much caught back up and surpassed going below 2019's back on the market. So we're actually keeping more home sales together this year than we did it last year at this point in time. And a testament to that is just a strong market. We've got buyers that are able to afford, either they're able to afford more money to buy a higher priced home, which we'll see in a second here, or maybe they're buying better within their means and their income to debt ratios are maybe a little better, and they're not losing out on financing issues. And honestly, I think another factor with this is that sellers are actually putting their homes on the market in a little bit better condition too. So we're not probably seeing as many homes fall apart due to inspection issues. So good job, sellers, making sure your homes are well maintained and ready to sell. So that's a good sign there. So 18%, that's pretty close to where we would normally be, I would say, in our marketplace. And so that gives that one a normal tag there. Median sale price. Now, just to clarify, this is single family resale only. I didn't break this one down by new construction and condo townhomes and stuff, because the bulk of our sales are in single family. This one just kind of tells a story about what's happening this year with home buyers. And there's a lot of talk and a lot of questions out there. Buyers are asking, are home values rising? Or sellers are going, gosh, I think my house is worth more this year. Well, that's probably, that's a whole different animal. And the reason why that is because median sale price does not indicate, a rise in median sale price does not automatically increase the home's value or the appreciation of value. With such low mortgage interest rates and with homes buyers that have been, cooped up in their homes, they're realizing that, hey, I need a bigger house. If I'm going to have to work from home over the next 6 months or a year, or if this is going to be the new norm for me, maybe now my employer says, hey, you can work from home. We have a lot of home buyers today that have changed their criteria, where maybe a home that didn't have a home office, or maybe that formal dining room. Good Lord, how many times have we looked at houses and said, boy, that formal dining room is nice, but I'm never going to use that room. I guarantee you there's a lot of formal dining rooms right now that are being used as home offices, and those are the kind of things that are going to be converted. So back to the median sale price, what we're seeing is we're seeing a rise in the median sale price, but I don't believe, talking with lenders, that we're seeing people out there spending at the top of their price point. So I think we're just seeing with that low interest rates, low mortgage interest rates are helping buyers to buy that little bit higher price point. And you can see from about April on, or March on, this has really been kind of the norm. Now, as we move into mid-year and into the fall, I'll start to track, whether or not we are getting any appreciation of values. But I think right now, this number, what we're seeing here, is all going to be due just to that low mortgage interest rate. So I'm going to call this normal because of the low mortgage interest rates. So weekly open houses, yeah, we're getting closer back to normal here. We had about 8 weeks here in the middle, right after, this is March. So we had that period of time there where everybody kind of stopped going to open houses. We could see the blue is the resale homes, and new construction is the purple. Resale still isn't quite back. You see 210 this 2 weeks ago, 216 resales last week, where we were normally in the 300s. And this number would be typically a little bit higher, but I think we're coming right back. I really think that open houses are going to actually make a return. There was an article in Realtor Magazine today I saw just before the show that said that home buyers are not afraid of coming back into the market, and that's, I think, so true. So week 23, we're right back on track with coming back closer to normal there. The three categories these are three graphics that you'll see on the next slide, but they're on my weekly dashboard, but I pull them off of there and put them onto this because they're easier to kind of see stacked instead of side by side. And I'll show you them on there in a second. But I said earlier, I didn't see a huge jump in new homes coming on the market. The last time we really saw a surge in homes coming back on the market was just before COVID-19 hit. And, we had our high week was at week 10, which was, just about that second week of March. We had 426 homes come on the market was our high. And you can see, compared to last year, the black line, we really haven't jumped out of that much. We kind of hit it the last couple of weeks, or met last year's numbers. But this past week, we only had 336 homes come on the market. So we are, I'm not seeing that rise in inventory, or that bump in a lot of homes coming on the market. So the weekly pending sales, however, last week did we did hit a new year-to-date high. 3 weeks ago, we had 351 homes that went into pending, and last week we had 391, so just under 400. A lot of this is due to what we would normally see in a spring market, when we see everything kind of pick up. But right now, we would normally see that number kind of flatten out, or maybe start to trend down. So a good sign is that the buyers are still out there. We had almost 400 homes go into contract this week, and so this will now be the new record. Same thing with closings. Back the end of March, April, May, April. So the end of April, we saw 225 homes closed was the highest number of homes closed in a week, and we have now hit 270. And a lot of this number is coming from these pending numbers. So we're going to see, continue to see a rise in closed sales here over the next 2 or 3 weeks as all these homes that are in pending status start to close. And you remember we saw that pending number was on the rise. So those are those 2 new records there. So those are those 3 stacked graphics you see down here on the bottom. The dashboard, if you were to take anything out that I have, this is produced, it's published on Simply Des Moines Stats on Facebook. So just go to Facebook and search Simply Des Moines Stats. This dashboard is graphic is there. You can you can download it from Facebook, and this will kind of give you just a week over week review of where we are in all the different categories. So again, we talked about the housing shortage being 3,546 short, and there's our current inventory of single family resale of 1,500 some. So again, it would take twice as many homes to come back on the market and then that would give us a balanced market by that point. So we're a long ways away from there. About 492 away from being into a balanced market in the condo townhomes, and then the new construction is right there. One interesting note here is the condo townhome new construction. Earlier this year, we had a lot of extra homes on the market, and we have now backed down to just over 13 homes as of last week. We have 13 homes over to bring it into a balanced market. So again, if we, just up and down, we're seeing that all the categories are getting pretty close to that zero shortages, except for the single family resale. So, we're sitting right now as of Sunday with 3,097 homes on the market. We did surpass 5,000 homes closed year to date of all properties last about a week ago, and we should probably, with the summer market, we're probably going to hit 6,000 again, and we are ahead of last year. So again, the dashboard is just kind of a good place to go. So I'll be back next week, June 16th, again Tuesday it's a week from today at noon. We'll come back and hit week 24, and I don't know, anybody have any questions? John, any questions or comments this week?
No, not today, Les. Good job.
Nothing? Okay. Very good. So, well, thank you all for joining me this week, and we'll see you guys next week. I'm working on a special guest. I'm not sure who that's going to be yet, but I'll work on that and see if I can answer some different questions, and this will be live at 3 o'clock. I'll do a premiere on Facebook. So thanks again for joining me, and we'll talk to you all again next week.